Forex Focus brought to you by IG. Can the Fed save the US dollar? It was a rough couple of weeks here as you look at the ascent of British pound over USD. In the early part of July, this market went from around 126 to 127 there. You can see they touched 126 briefly in the later part of June, all the way above 131 at one point here in July. Quite the move there, several hundred pips. And now the US dollar has been able to fight back a little bit, split the difference close to 128 and change here. But still, some of the highest prices for pound, some of the lowest prices for US dollar in terms of pound in the last year or so here, definitely in 2023, and going back to all the US dollar strength that we saw in the later part of 2022. Where is this coming from? Well, we saw, and this is, Forex markets are so interesting because it's not so black and white as to say in the stock market, it can be more black and white, that it's like earnings are really good across, technology, energy, and everything else. And so the stock market's doing well, or earnings are really bad. Stock market's not doing so hot. Inflation is a key driver of Forex because it can drive interest rates, which we'll get to in a second. And it's almost like the earnings of the Forex market here, where you can see sometimes, inflation is higher, at least what we've seen recently. Inflation's high in the US, interest rates move higher in the US, and US dollar can move higher off of that potential greater demand for those higher US interest rates. Not so fast, because it's almost like technology earnings are doing really well, energy earnings are not doing well. And so these markets are really shifting around relative to each other because Forex is a game of relativity. And so what we saw recently is the US dollar get beat up because inflation was lower than expected. And then people started to think, well, maybe US interest rates don't have to get that much higher. And so I don't want my US dollar, I want my British pound, because inflation's still near 8% over in the UK, and they're likely going to have to hike interest rates further. Well, not so fast, because the US reports lower than expected inflation about 2 weeks ago, and then the UK last week reports lower than expected inflation. And so you see this canceling out almost, where US reports low inflation, dollar gets depreciates against the pound. Pound moves from 128 all the way up to 131. UK comes out, reports lower inflation, reverses a lot of that action. Of course, it's not one for one. There's a lot of stuff going on here. But you can see some of the effect on interest rates, and that's a big driver for Forex, as the US reports lower than expected inflation a couple of weeks ago, and expectations for interest rates are now down to around 4% by 2025. We're above 5% currently. So the market pricing in some interest rate cuts actually in the next year or so of action, falling inflation translating to some lower interest rate expectations. And that's the same as what we just saw with the UK inflation feeding to lower expectations there, leading to the pound moving lower as well, as lower rates can make a currency less attractive. Now, there's been some interesting action as you get deeper and deeper into this world, because a lot of people will say, okay, well, what's the dollar doing against the euro, the pound, and the yen? Well, look at the Swiss franc here, has been able to actually hold on to a lot of its gains as US dollar, Swiss franc fell to new lows since 2015 on US interest rate expectations falling, and essentially no change out of Switzerland. So we saw the big move in pound versus dollar, and then a lot of that be corrected because of information coming out of UK. Not the same here in Switzerland, as the Swiss francs actually, the dollar's bounced back a little bit from the lows, but held on to a lot of the gains the Swiss franc has. And yeah, these are, below 88, 87, where we're still trading today. those are lows for the US dollar, highs for the Swiss franc since 2015. And if you go take a look at that data in 2015, only there for a brief moment. So still seeing some really interesting price action, some interesting extremes in these dollar-oriented markets. And it'll only get more interesting from here if the Fed hikes as expected here in July and talks about, being more confident in more hikes in the future. That could be US dollar strength. Then you could see that US dollar make up some ground on the Swiss franc, and maybe the pound gets back down to 125 where it was trading a few weeks ago. Maybe the euro gets back down under 110 where it was a few weeks ago. But of course, the flip side of that coin is the Fed either hikes and then is less confident about future rate hikes, or of course it's 99.8% as of today chance that they do hike. If they don't hike, that would be chaos potentially. You're talking about a move that's 99.8% priced in, and then the Fed comes out and does what the market hasn't priced in, 0.2% chance. You potentially would see a lot of action. Obviously doesn't look like that's going to happen, but if the Fed does come out and is less confident about future rate hikes, or they're saying, yeah, we might cut rates in 2024 or 2025, you could see the US dollar give up even more ground against those major pairs. So really, really interesting time to be trading US dollar here against pound, euro, yen, and that Swiss franc as well, seeing some historical extremes, and a lot of it hinging on what the Fed will do in the short term, but also what they'll talk about doing in the medium term in 24 and 25. So a lot to watch here. We'll see if that Fed can save the US dollar from some of its lower extremes that we've been seeing, or if they only add fuel to the fire, so to speak.